Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the stock market so you don't have to. Today we're diving into NetScout Systems Inc.'s latest report, and let me tell you there's some interesting stuff going on with their shareholder voting and plan approvals. It's not your typical earnings report, but it tells us a lot about how the company is being managed from the top down. Before we get into the nitty-gritty, if you love getting clear insights from these dense filings, make sure you're subscribed to the channel. And hey, we've built a fantastic community over on Discord to discuss these topics further, so check out the link in the description below. So what we have here is a report that's an 8K filing. Think of this as a really important announcement from a company to its investors, usually about something big that just happened, often outside of their regular financial reporting cycle. In this case, the big event was NetScout's 2025 annual meeting of stockholders. This is where the owners of the company, the shareholders, get to vote on important matters and, well, elect the people who run the company. We're looking at NetScout Systems, a company that provides network assurance and cybersecurity solutions. Essentially, they help businesses keep their computer networks running smoothly and securely. They're a pretty established player in this tech space. The main date we're focusing on is September 10, 2025, which was when this big annual meeting took place. Now, let's get to the meat of it. One of the key things that happened at the meeting was related to how much stock the company can offer to its employees. As a way to reward them and keep them motivated, this is done through what they call an equity incentive plan. Essentially, it's a way to give employees a stake in the company's success by awarding them stock or options to buy stock. What NetScout announced is that the shareholders voted to increase the total number of shares available under their 2019 stock incentive plan. They added a significant chunk, 3.5 million more shares. This is a big deal because it directly impacts how many shares can be given out in the future, which can affect the value of existing shares if too many new shares are issued. The company's directors, who are like the supervisors of the company, had already given their okay to this increase back in July, but it always needs the final nod from the actual owners, the stockholders, and on September 10th they got that approval. Essentially, the plan became official right after the meeting. This part of the report goes into detail about all the specific proposals that were put in front of the shareholders for a vote. It's like a recap of the meeting's key decisions. Just to give you some scale, on the day of the meeting, over 72 million shares of NetScout stock were out there being owned by various people and institutions. This gives us the baseline for how voting power is distributed. A really important part of any annual meeting is electing the board of directors. These are the folks who are meant to represent the shareholders' best interests and guide the company's strategy. NetScout's shareholders voted to re-elect 4 directors: Robert E. Donohue, John R. Egan, Marlene Pelage, and Anil K. Singhal. They'll be serving for the next 3 years until the 2028 meeting. It's like choosing the captain and key crew members for the ship for a significant voyage. Let's look at the voting numbers for these directors. For Robert E. Donohue, a huge majority, over 53 million shares, voted in favour. About 6 million were withheld, meaning shareholders either weren't sure or wanted to express some reservation, and roughly another 6 million shares didn't vote on this particular director, which we call broker non-votes. These are shares held by brokers that didn't receive instructions on how to vote. John R. Egan also received strong support with about 48 million votes for him. A bit more were withheld at over 10 million, and the same number of broker non-votes. Marlene Pelage had a really very strong showing with over 58 million votes in favour and a very small number withheld or no votes otherwise. This shows a high level of confidence from the shareholders. Scroll K. Singhal Send, finally, Anil K. Singhal got over 53 million votes for him, with around 5 million withheld and the usual broker non-votes. Generally, these numbers indicate a solid endorsement for the slate of directors presented. No one seemed to be fighting for the board's current makeup. Next up, something called a say-on-pay vote. This is where shareholders get to vote, usually advisory, meaning it's not binding on how much the company's top executives are paid. It's a way for shareholders to voice their opinion on executive compensation packages. Here, over 51 million shares voted yes, showing approval for the executive pay as presented in the company's proxy statement. About 7.8 million voted against it, and a very small number abstained. This is a generally positive result, indicating that most shareholders felt the compensation was reasonable given the company's performance. Now, let's revisit that plan to increase the number of shares for employee incentives. This proposal passed with around 44.9 million shares voting in favour. However, there were about 14 million shares that voted against it, and a small number abstained. The fact that almost a third of the shares voted against increasing the stock pool shows a notable level of concern among some shareholders. They might feel that giving out too many new shares could dilute the value of their existing ownership. It's a common debate in corporate governance, balancing the need to incentivize employees with protecting the value for current shareholders. Finally, the shareholders approved keeping PricewaterhouseCoopers, or PAC, as the company's external auditor. This is a standard practice to ensure that the company's financial statements are reviewed by an independent party. The vote to ratify PAC was overwhelming. Over 59 million shares voted for it, with only about 5.6 million voting against and a small number abstaining. This essentially means shareholders trust POC to do their job and verify that NetScout's financial numbers are accurate and presented fairly. So looking at this filing, what's the big picture? NetScout's shareholders have given a thumbs up to the company's leadership by re-electing directors with solid majority votes. They also approved the executive compensation, which is a good sign of confidence in how the company is managed at the very top. The big talking point, though, is the vote on the increased stock incentive plan. While it passed, the significant number of dissenting votes highlights a cautious sentiment among a portion of their owners. This could mean future decisions around stock compensation will be watched very closely. The company is in a business that requires attracting and retaining top talent, especially in cybersecurity and network technology. So having a robust incentive plan is crucial. However, as we saw with the vote, there's a balancing act. Management needs to convince shareholders that any new shares issued under such plans will genuinely drive growth and create more value than they dilute. It's not just about having the plan, it's about demonstrating its effectiveness and impact. From my perspective, NetScout seems to be navigating these corporate governance waters reasonably well. The directors are clearly endorsed and the auditor choice is a non-issue. The stock plan vote, while not a crisis, is a signal. Shareholders are paying attention to dilution. If NetScout plans to heavily use this new pool of shares, there'll need to be extra plans to heavily use this new pool of shares. There'll need to be extra plans to heavily use this new pool of shares. They'll need to be extra transparent about how these awards will translate into tangible company performance and shareholder returns, not just abstract employee rewards. It's always a tough balance, but one that smart companies manage. Alright, that's our breakdown of NetScout's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think the stock incentive plan is a positive or negative for shareholders? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description to join the conversation. Thanks for watching. See you next time.